New futures trading could very well mean a new future for you in a stock market. The ability to be profitable every week, every month, the ability to build your trading account into thousands, hundreds of thousands of dollars. Now, trading the markets can be risky. So the proper education, the proper training is of most value to you. It's most valuable to you. Trading the markets can be very profitable. To me, there is no business like it, but having the understanding and having the discipline, it's extremely important. Now here I'm looking at 144 tick chart. And this is still the DAX, as you can see up here. You can look at the toolbar here and you can see what this is. If I was looking at the market at this time right here, could I have the expectation that this market was going to reverse here before we got here? And the answer to that is yes. There's many signals here. First signal, it would be that these bars came down very quick. See, it was nothing like this. It came down very quick. It's like 1 bar, 2 bars, 3 bars. It hit a destination. Then, what is that destination? The destination is what we call the green line, a deep retracement. In addition to this, we had right here separation. So there is separation between the VBs and the gray line, which means a snap could come in. Plus, we are sitting here in a support area. The blue line, that's an area of support. Once this bar closed up off the bottom and then it moved over to this side, this is the place where a person would buy. And a person would buy this with using a very, very small area for a stop loss. Very small area for stop loss. We actually call this boundaries. Another thing that's very important with new futures trading is the language. Imagine me saying, getting into a trade and thinking about a stop loss. It's like I'm already thinking about losing. How can I succeed talking and thinking and having the feelings of losing? It doesn't work that way, but that is how better than 90% of the people communicate and think in a market. The next thing is, what would be the target? Well, this pattern here is insinuating to me that there is a shoulder here. And this part here now becomes a head. This would be what we would be calling an inverted head and shoulder. Shoulder head, then the next shoulder will be somewhere in this area. So a person would be expecting this to come up to somewhere in this area. The push-up would give me plenty of room to adjust my boundary to break even plus a few ticks. Just in case it is not what I thought it would be. Then if the market came back down, I would have nothing to lose. All I did was invested some time. Once it broke above this area and it kept on going, then you would be looking at what it did up here, the second shoulder. Now, there is something interesting, very interesting about these shoulders. The shoulder also can function like a Slim Jim, which also, it's another part of the things you will learn, that you can measure these and you know the target. You can measure these shoulders and you know the targets. Another way to measure this is, of course, with your Fibonacci. I can go with my Fibonacci here. This is the bar I would use. This is the bar I would use. And I can see that we hit the 61. Well, hitting the 61 tells me that there is a possibility for a pullback. The pullback to where? More than likely to the area where it created a sideways effect, which was an area of support. But this pullback can also be measured, and then it would give me the bounce from the pullback. I would expect the market to come to at least 100%. You see, there is a system in place. There is a systematic way of trading the market. The next thing is we could measure this to see if the pullback would match, the area would match the percentage. Beautiful, 50%. Hits the 50%, and then it produced what we call a shoulder and a head boss set up. So if you close half of your position up here, or you close the whole position because you could tell that the weakness through here could mean a deep pullback or pullback to the 50%, you could have bought it again over here. And the next destination, it would have been at least 100%. Now, when you got up here to the 100%, you would not have to exit this trade, because the power of direction is telling you there is more upside. So you hold your trade as long as the power of direction is communicating. Once the power of direction hits this peak, or once the bars hit this peak up here, now you know it's going to come down. You see, taking the time to learn your indicators, taking the time to learn how the market behaves. Yeah, another thing here is that you see it's producing a shoulder already. So right here is producing a shoulder. You got a shoulder here. And on this shoulder, you know you're going to get ahead. You see, this would not be a surprise to me, because if I'm going sideways here and I'm still grabbing the rail, I still expect the market to pop. This kind of picture here, the market will pop. You see, it's very strong all the way through compared to this one here. And then when it popped for the head, that would have been the place to exit your trade, or the place to take a short, or both. And then you had a shoulder head busted up here too. Now, when the market dropped, you would expect the market to slow down in this area here, like it did, and produce again some kind of a shoulder. Now, the shoulder back here was a little bit high. The market normally tends to produce the right shoulders pretty within an area like this. Now, notice what I said. The market tends to do. I'm always looking for what the market tends to do. I'm always looking for the same behavior. The wonderful thing here is that I have awesome indicators that tells me the areas. So when I can correlate the picture of the charts, the picture that I'm getting that's manifesting here, correlate that with the measurements, and then correlate that with the power of direction, I'm going to do very well in the market, and so can you. The only thing is, this is not something you learn overnight. I must emphasize that it can take you 3 months, 6 months to learn this. And the consistency, meaning that as you do this, the consistency of how you do it, it's going to determine how fast you're going to learn. Because if one day I'm looking for one thing, the next day I'm doing another, I'm just teaching my brain to be lost and not to really know what I want to do. Now, you notice that from here to here, we had the 50%, and from here to here, we had the deep retracement. You see, those two are very important. This indicator will help you to know which is which. Now, notice the same thing here. The deep retracements again, the green line, yellow line. And notice the separation over here again. Also notice that the market here is giving you the same behavior as it did back there. Notice that the market over here is giving you a shoulder, and then is giving you a head. Oops, I'm playing with my things here. All of this so I won't click the button. And then notice how this market here did the same thing, got you the second shoulder right there. See a little bit higher? See a little bit higher? Don't you find that interesting? Now let me give you another tip. I've been giving you lots of free tips here, which is my pleasure. And there is so much more. So how about this? How about this? First target. Look at the way it matches. How about that first target? How about the second target? What do you think about that? I hope that these videos convince you that there is a system in place. There's a system that is calculated and you are able to learn it, which once you know this and you understand this, this is how you're going to be able to make this business a very successful business for you. Then between here and here, there isn't much divergence. But right here there is lots of weakness. Right here there is lots of weakness because of the separation. You would know that would be a place to exit your trade. To exit your trade. And of course this entry here, it's so clear. So clear with the bear flags. And trading them. So Friday, which was last Friday, yesterday, today's the 25th, this is the 24th. If I was trading the DAX, could have made thousands of dollars. But it's not a mini miny mo. It's not a lucky thing. It's a very systematic thing. Learn. Get the proper education. Receive the proper education. Get involved with people that understand how the markets move. Be part of the 10% that are successful in the market. After all, that is what your heart desires. So, there's 4 elements here. The first element is mind over matter. That means my mind is going to be strictly focused on technicals and all the analysis that the charts and indicators are communicating to me. The second element here is the patterns, the recognition of the patterns. The third element is the ability to measure them with lines or Fibonacci's. And the fourth element, it is the power of direction. How can it be so consistent? The market is people. People are predictable. I want to thank you for visiting. I want to thank you for taking the time to listening to me, for allowing me into your home or office. And if you need help and you want to become a professional trader, contact us. Contact New Futures Trading. Thank you.